Hello everyone, welcome to my YouTube channel. So let me go through in this particular video the accounts learning material. So I have created a set of learning information related to accounts, so which can help a lot of freshers or experienced people. So let me go through each and every topic so that it will help many people. So the first topic which I have mentioned here is bankruptcy. So it is a legal process through which the people or other entities or a company who cannot repay the debts to creditors may seek relief from some or all of their debts. It is not the only legal status that an insolvent person may have, and the term is therefore not a synonym for insolvency. So, how does this works? It offers an individual or a business a chance to start afresh by forgiving debts that they cannot pay. Meanwhile, creditors have a chance to get some repayment based on the individual or business assets available for liquidation. And it is paid by the person filing bankruptcy. The court fees and cost of an attorney are all required to paid by the filer, and as are any non-dischargeable debts that bankruptcy cannot clear. So it is a legal proceeding initiated by when a person or a business is unable to repay outstanding debts or obligations. So here there are a lot of words which gives you a simple explanation which is understandable and easy enough. So it's a legal proceeding initiated when a person or a business when they are unable to repay the outstanding debts or obligation. It offers an individual or a business a chance to start afresh by forgiving debts that they cannot pay. Next topic is fictitious assets. So it has no physical existence or realizable value, but the company shows them as a cash expenditure in the books of accounts. So which cannot be seen. Okay, no physical existence. And these are the type of assets that have no physical existence. That means such assets do not have any realizable value. However, they are reported as actual cash expenses in financial statement. These are the expenses and losses that are not offset in the P&L account or profit and loss account. Fictitious assets do not have a tangible existence or any realizable value, but they get reported as actual cash expenditure in the financial statement. So, the example of fictitious asset are promotional expenses, preliminary expense, discount on issue of shares, discount or loss on issue of debenture. So these are the assets which have no physical existence. It does not have a tangible existence or realizable value. And these are the expenses and losses that are not offset in the P&L account. Next topic they have given is current assets versus non-current assets. So current assets are a company short-term assets that cannot be liquidated quickly and used for a company immediate needs. Non-current assets are long-term and have a useful life more than a year. So the example of current assets are cash, marketable securities, inventory, and accounts receivable. Examples of non-current assets are long-term investment, land, property, plant and equipment, and trademark. So here an overview has been given on current assets. Assets are the resource that a company require in order to run and grow the business. And it is divided into two categories. One is the current and non-current, which appear on a company's balance sheet and combine to form a company's total assets. Let us go through on next topic. And before that, they have given current assets are most often valued at market price, whereas non-current assets are valued at costless depreciation. Then, capital gain tax applies to profit on the sale of assets held for more than a year. So this PDF has nearly 16 pages. So in case if anyone is interested to have this PDF, do let me know in YouTube comments or personally to me in WhatsApp so that I can try to share this to your mail ID. And even if you are a college students, it will also help you, because these kind of topics or certain topics which are simple and clear, which cannot be explained or it might not be in certain textbooks. What is liquidation? Liquidation refers to the selling of poor performing goods at a price lower than the cost to the business, or at a price lower than the business desires. Okay, what are the term liquidation in finance and economics is the process of bringing a business to an end and distributing its assets to claimants. Okay, so bringing the business to an end, liquidation, the end of the business. A bankrupt business is no longer in existence once the liquidation process is complete and it has been deregistered. Liquidation usually occurs during the bankruptcy process. Proceeds are distributed to claimants in order of priority. Creditors receive priority over shareholders. Liquidation can also refer to the process of selling of inventory, usually at steep discount. Next is accounting period. So, accounting period is a span of time that covers certain accounting functions. It can be either a calendar or a fiscal year, but also it can be a week, month, or a quarter. Accounting period are created for reporting and analyzing purpose, and the accrual method of accounting allows for consistent reporting. Accrual accounting is governed by two important principles. One is revenue recognition and matching. The revenue recognition principle states that revenue should be reported when it is earned rather than when the cash is received. The matching principle states that an expense should be reported in the same accounting period as the revenue generated by the expense. The accounting period, so here they have given a clear information on what does that accounting period means. It is an established range of time during which accounting functions are performed, aggregated, and analyzed. It may consist of weeks, months, quarter, calendar years, or fiscal year. What is gap? So this I have actually, when I post opening, some companies usually ask the prior experience in gap. So gap is all about a full form generally accepted accounting principles. So it means the common set of accounting rules, standards, and procedure issued by the Financial Accounting Standard Board, FASB. Public companies in the US must follow gap when their accountant compile their financial statement. And there are 10 principles in gap concepts. One is principle of regularity. The accountant has adhered to the gap rules and regulations as a standard. Principle of consistency, sincerity, principle of permanence of method, non-compensation. So everything is explained here clearly. Then the next is a short note or just a brief intro what they have given above. GAAP is a set of accounting rules set forth by the FASB that US companies must follow when making together the financial statements. GAAP aims to improve the clarity, consistency, and comparability of the communication of financial information. GAAP may be contrasted with the pro forma accounting, which is a non GAAP financial reporting method. What is accounting ratio? Accounting ratio is an important subset of financial ratio, are a group of metrics used to measure the efficiency and profitability of a company based on its financial reports. They provide a way of expressing the relationship between one accounting data point to another and are the basis of ratio analysis. And the most common accounting ratios. Depending on the, so here the list of ratios which mostly used are absolute liquid ratio. It's a relationship between the absolute liquid or super quick current assets and liabilities. Activity ratio, asset turnover ratio, current cash debt coverage ratio. So these are the topics which are covered in the accounting ratio. What is contra account? So contra account is used in a general ledger to reduce the value of a related account when the two are netted together. A contra account nature balance is the opposite of associated account. If a debit is natural balance recorded in related account, the contra account records to a credit. For example, contra account for a fixed asset is accumulated depreciation. The key takeaways are the contra account is an account used in GL to reduce the value of a related account. And the key examples are accumulated depreciation and allowance for doubtful accounts. What is COGS or cost of goods sold? It means the direct cost of producing the goods sold by the company. This amount includes cost of the material and labor directly used to create the good. It excludes indirect expenses such as distribution cost and sales force cost. And what is accounting? When a company makes money, it has to keep track of where that money came from and where it goes. So usually you would have seen like we have a track of records, bookkeeping, accounts, where whatever the expenses and losses, profit, gain, loss, income, so everything is being noted down. Accrual accounting, the method of accounting that records transaction when they happen or not when the money is received or paid. Expenses, money you spent on things you need to run your business. Profit, the money you have left over after you subtract your expenses from your income. Equity, the difference between your assets and liabilities. Revenue, total amount of money coming into your business. Accounts payable, money you owe to others for goods or services that you received but haven't paid for yet. Accounts receivable or O2C, money others owe you for goods or service you have provided but haven't paid for it. I think both are repeated or what? Okay. Debit and credit. These marks are called debit and credit and they help the company to make sure it has the right amount of money and things. General ledger. When the company buys or sells something or pays or get paid, it has to make two marks if in its special book called general ledger. Balance sheet. It shows how much a company has, how much it owes, and how much is left for the owner of the company. Then COGS, they have explained gross profit. Gross profit is the amount of money you have left over after subtracting cost of goods sold from revenue. Net income, the amount of money that you have left after subtracting operating expenses from gross profit. Depreciation, the decrease in value of an asset over time. And usually contingent liabilities also in certain interviews they ask, and I have also mentioned certain interview questions in my Facebook aptitude group. In case if anyone is not part of that group or if you want to join that group where you want to know the lot of interview questions, you can let me know. I'll share you the link of that group. It has also a lot of interview questions related to the accounts related topics, but this PDF I have not updated in the group. This is something separate PDF related to accounts which I'm explaining in this particular video. The next topic which is mentioned is income statement. Income statement, it's one of the three most important financial statement used for reporting a company's financial performance over specific accounting period. Okay, and they have mentioned about net present value, difference between the present value of cash inflows and the present value of cash outflows over a period of time, and it is used in capital budgeting and investment planning to analyze profitability of a projected investment or a project. NPV and gross profit. Gross profit is a profit the company makes after deducting the cost associated with making and selling its products or the cost associated with providing its services, and it will appear on a company's income statement and can be calculated by subtracting the cost of goods sold from the revenue or sales. Deferred revenue expenditure. These expenses which will be incurred in the current accounting period but benefits of the expenses will be available over several accounting period. Yeah, I have discussed on this no contingent liability before some time, so it's been mentioned here. Liability that will arise only on the happening of a certain event. It is recorded to ensure that financial statements are accurate and meet GAAP or IFRS requirements. It is never recorded in the financial statement of a company. It's never recorded, okay? And example is a company supplier is unable to obtain a bank loan. A company agrees to guarantee that the supplier bank loan will be repaid. As a result of the company guarantee, bank makes loan to the supplier. Company has the contingent liability. If the supplier makes the loan payment needed to pay off the loan, the company will have no liability. If the supplier fails to repay the bank, the company will have a actual liability. A product warranty is also a contingent liability. What is accounting cycle? So they have mentioned the accounting cycle incorporates all the accounts like journal entries, debit and credit, adjusting entries. These are the things. So journal entries, accounting cycle. What is the meaning? Also, it's mentioned the holistic process of recording and processing all financial transaction of a company from when the transaction occurs to its representation on the financial statement to closing the accounts. Journal entries with the transaction set in place. The next step is to record these entries in company's journal in chronological order. In debiting one or more accounts and crediting one or more accounts, debit and credit must always balance. What is suspense account? Suspense account is an account used to temporarily store transaction for which there is uncertainty about where they should be recorded. It is useful to have a suspense account rather than not recording the transaction at all until there is a sufficient information available to create an entry to the correct account. Definition of general ledger. General ledger account is an account or record used to sort, store, and summarize a company transaction. These accounts are arranged in the general ledger with the balance sheet appears first followed by the income statement accounts. Examples: some of the more common balance sheet accounts and how they are further arranged in the general ledger are assets accounts such as cash, AR, inventory, investment, land and equipment. Record to report or R2R process. Record to reporting. So it's a finance and accounting management process that involves collecting, processing, and delivering relevant, timely, and accurate information used for providing a financial, strategic, and operational feedback to understand how a business is performing. What is accounting cycle? Complete sequence of an accounting process starts with recording of the transaction and ends with presentation of financial information. Identify transaction, record journal entries, post ledger entries, preparation of unadjusted trial balance, adjustment entries, adjusted trial balance, presentation of financial statement, and close of accounts. Provisions. Provisions are a charge against profits made irrespective of profit earned or loss incurred ca- cannot be used to distribute dividend to the shareholders mandatory as per the various laws. Accruals, accrual accounting. There are many information which has been mentioned here, which can help people whoever is more interested in accounts, CA students, or and in college we don't get an idea on what is the various process which has an accounts like how people we tell right R2R accounts or general ledger, and one other is O to C accounts or order to cash, which is also called as accounts receivable. And next is accounts payable or P2P. So where we have this SAP application invoicing, and in O to C or accounts receivable, we have this billing, collections, all these things. So if in college, if these topics are covered, like what exactly the process, what department, like it will be easy for people when they are working in a company, like be it accounts related company. And here they have mentioned cost accounting, tax accounting, forensic accounting, what is the details. So I hope this video helps. So it has lot of information as you have seen here. So do let me know if you need this PDF, and apart from that, you will have a clear idea about how much useful informations are available, and it can help students or freshers or be it even 2 to 3 years experienced. I hope this like I hope you like this particular video, which has important information for commerce background students or BCom background people. So do check, and do share it across. If you feel this video is helpful, pass it on so that it can benefit any one of them who can get some valuable information on accounts related topics. Thank you all.